Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larby.
Hey, welcome back to this week's episode. It is Sarah Larby. You are listening to Where Should I Invest? And today I have as a guest Ava Benesocky, who is a realtor and real estate investor. And she started out in Alberta and moved to Vancouver and essentially got into US investing and growing a portfolio there, investing in the Sunbelt specifically. So we talk about that during today's podcast. I hope you enjoy it. And we'll see you again next week. So let's bring in Ava. Ava, welcome to the show. How are you?
I'm doing fantastic today. And before we start, I just wanted to say I love and respect you. I know how much it is.
You.
Woman doing podcasts, every single, keeping up with it is so much work. So thank you so much for having me on today.
I'm really excited. I'm really excited to talk to you based on, so many things. And I'm also very inspired with what you've accomplished so far and what you're doing. So I can't wait to have this conversation. Before we really dig deep and dive into it, can you give us an overview of how you got started in real estate investing?
Of course, yes. This is I love telling actually, I'm going to go back to when I got started at the age of 22. I'm from a small city in Alberta. And I grew up there and everybody knew, liked, and trusted me. And that's kind of what you need in this business. So I did really, really well in the real estate. I've been a realtor for over a decade. And it was going great. But I got this big dream one day. I'll never forget going to my family. I'm like, you know what? I want to move to the big city. Because everybody was getting married and having children, and I was kind of this businesswoman. And I'm like, Mom and Dad, I'm going to do it. So I sold my property. It sold within a week. And I packed just the fashion that I had that I could fit into the back of my car. And I drove out to this big city, not knowing a single soul, not knowing what I was getting myself into. And I'll never forget seeing all the towers and everything in the downtown Vancouver, that is. I was like, I'm going to do real estate in Vancouver. Started my career here, pretty much got eaten up and spit out. I was no longer in a pond, I was in the ocean, and I was swimming with sharks. And everything that I learned that worked well and that I was successful with in a small city just didn't even have a chance here in the big city. So it really got me to take a step back, to kind of put a halt on things. I reinvented myself as a woman. I reinvented myself as a businesswoman, and I really started learning how to make it in real estate here in the big city as a realtor. Now, when I moved here, this is kind of the exciting part about how I started my company, CMPI Capital. But when I moved here, I started seeing all these frustrated real estate investors. I was dealing with people on a daily basis where they came to me and said, Ava, I have money to deploy. Where do I put it? Where do I put it? I mean, the average house price here is 1.2 million. The mortgage, the rigid mortgage laws are out of control across Canada, if you will, and negative cash flow when they're investing in something. So I saw this fundamental need that people had to put their money in real estate, because everybody's taught, invest in real estate, but not really kind of hitting their head against the wall, not really knowing where to put their money. So that is where life works in very mysterious ways. And that's at the time, probably about 2 years after I was in Vancouver, where I met my business partner, August Benesocky. He happened to be a developer for 15 years here in this city, and he's seen very similar difficulties that people had. So we put our minds together, and this is where CMPI kind of spawned out. We developed this company where we could solve pain points for Canadian real estate investors, and I can dive into deeper into what that means.
Absolutely. We'll definitely get there. I mean, there's tons of stuff tons of information that you just gave us. And, but it is interesting your journey where you said, okay, I'm going to go and I'm going to, go into the big city from, a smaller city. And you decided to, instead of saying, oh crap, what did I do? I got to go back. You persevered through it. Are you able to share maybe a little bit of your struggles, as you were first starting out, going from small town, everybody liked and trusted you, like you mentioned, into something bigger before you had your business, because there might be somebody in the situation right now going through that, or, that needs that additional maybe push, or to hear how you did it.
Yeah, no, I'd love to share. I'll tell you one thing. There was a lot of calls home to mom and dad. There's a lot of tears. It was like probably the most difficult time in my life. And what I did was I persevered by, there's a point that hit, that kind of hit me in I wasn't getting anywhere. It was like I was a hamster on a wheel, and I was trying to work with realtors that were just successful here, but I noticed that they were just using me to try to get me to do the little things and promising all these things, and nothing was ever coming out of it. My parents just kept saying, come home, you know what you got here, don't be silly. 2 years of complete, like, utter, I'm not coming home, I came here for a purpose and I'm not going to fail. And essentially what I did, what really turned things around for me, was I started learning from people who were smarter than me. I started surrounding myself with good people and being very careful with who I hung out with. And that's where things started to turn around for me.
That is awesome. I mean, they do say that, all the successful real estate investors anyways, we don't do it by ourselves, right? We have a team of people around us. And also, you are the average of the 5 people that you hang out with the most. So I think that was probably part of the, what you just mentioned there. And I do want to talk about Vancouver for a second before we dig into the US portion, but Vancouver is very expensive, right? And so there's no cash flow. I think people invest there for appreciation, but did you look outside of Vancouver, like an hour, 2 hours, and say, is that an option for my investors? Is that something that you originally did?
Yes, of course. But then we started dealing with being an active investor. Now you got to be a landlord. Now you got to make sure that you have somebody in that area that's located, a couple hours away, to be able to manage things if things go, somebody needs a plumber in the middle of the night and so forth. So that was where, by the time I educated my investor on, okay, there's the outskirts here, and by the time I educated them on all the ins and outs of being an active investor, they're just spinning in their head, and they get cold. I noticed a lot of people were getting cold feet.
Yeah, I mean, there's lots of different types of investors, right? There's those that are going to be more hands-on, and those that probably just want to, enjoy their time on their boat and not have to worry and have their money working for them. So, all right, so talk to us about CPI Capital and what that is exactly.
Of course. So CPI Capital is a real estate investment management firm, and we essentially pool together capital from Canadian investors and we deploy it into US multifamily assets, real estate assets. These are 100 plus apartment communities located in the Sunbelt states, up and coming areas with lots of job growth, population growth, really cool multifamily garden style communities. It's the in thing in the US. They're actually incredible. It's like you're living at a resort. You got the pool, you got the fitness center, everything right outside your door. So that's the assets that we target.
Amazing. And I like that you mentioned Canadian investors, because there's a lot of people doing it, but they're not necessarily helping Canadians. And it sounds like, is that what you're strictly working with, is Canadian funds going into the US only, or are you also taking US funds?
So we're focused on the Canadians.
Nice.
We want to educate our Canadian partners, and we do have some US investors. They go right into the limited partnership in the US, but we have our Canadians that I can dive into more into.
Yeah, no, absolutely. I mean, I think that's interesting, because obviously it's important to, especially in my opinion, with the pandemic and just the government's response to everything, to diversify a little bit, to, spread out the risk. I still believe that investing in Canada is awesome, and I'm still continuing to do that. But even myself, right? I'm like, okay, do I want to have everything in Canada, or should I start looking at diversifying a little bit? Because I don't know what the government's plans are in the long term, right? I mean, some of it's a little bit scary what they're currently doing.
Yes.
So talk to us more about like how you help. Like, let's just say somebody's got, I don't know, let's just call it $100,000, just for simplicity. Like walk us through how that money can grow and where that goes, and how much hands-on or hands-off that investor would be.
Incredible. So yeah, I'll take a step back here. The people purchasing real estate in Canada, you're either purchasing for appreciation, like here in Vancouver, or Alberta and other places, and I know Toronto's appreciation as well, or other places where there's not much appreciation and a little bit of cash flow. So the particular reason why we went after multifamily assets in the US is because you're receiving cash flow from day one, and you're receiving significant appreciation as well, by forced appreciation and natural appreciation. So here's how it works. We pull together capital from investors. So our investors are strictly passive investors. So we do all kind of the heavy lifting. We educate them on the process as much as they want to know. They write a check, they sit back, they relax, and they start receiving cash flow from day one. Now, multifamily assets in the US, I just want to explain this because it's really, really cool. The rent to value ratio makes sense in the US. The cap rates are much more beautiful than they are here. This is why we can't receive the type of returns here in Canada. But with a 100+ apartment community, you're receiving rents that are coming in because it's a rental, essentially rental, everybody's renting. And now from the rent roll coming in, because the price is so good there, you can pay your third-party property manager, you can pay your mortgage, you can pay your taxes, and after all the expenses every month, you have a lump sum of money that you can give back to your investors. So that is beautiful. So me being able to say, hey guys, take away the chaos to my investors, take away the chaos, take away the active investing, focus on your family, focus on being on your boat, like you said earlier, sit back, write a check, passively invest, and you start receiving cash flow, and we distribute it quarterly to our investors. So they get paychecks in their accounts quarterly. Now we go for assets where we can force appreciate. So not only is there cash flow coming in, now we go in there and we up the rents, we change the property management out. Maybe we do some lipstick renovations on the interior and exterior. Now that's huge, because what that does is when we hold an asset for 5 years, we're getting the natural appreciation of the market. Now, when we go in there and we do lipstick renovation or bring in new tenants and so forth, now we forced appreciate. That's where investors make a boatload of money at the end of that 3 to 5 years.
Awesome. So they're in it for 3 to 5 years, and it's not like, so it sounds to me, based on what they invest, then they're getting some equity, they're getting some cash flow. It's not like like a return, right? Like is it like a fixed return, or is it more depending on how the asset performs? You get a certain amount of, you're a shareholder of a certain percentage type of thing. Is that more how you guys do it?
Yeah, so we on the Canadian entity, our investors invest in something called a limited partnership, and that means limited liability for the Canadian investor, which is great. Now what happens, let's go back on $100,000 investment. Essentially what happens is we do our underwriting and we show the investor the numbers before they invest their $100,000. And let's use for an example, a deal that I'm working on right now in Orlando. Our investors are going to be receiving a 6 to 10% return on their cash, return on their investment. So at $100,000, let's say on the high end, that's $10,000 cash on cash returned back to the investor.
All right. So that's a yearly cash on cash return.
That's every year that you're invested in the property. You've got it.
Okay. And then what happens at year 5 as an example?
So year 5, after we force appreciate and we obviously bank on the natural appreciation, we sell the asset. And we like to say that we'd like to double our investors' money within 5 years. So with the cash flow that they've been receiving, let's say $50,000, at the end of year 5, when we sell the asset, let's bank another $50,000 forecasted returns.
Okay. All right. Awesome. And obviously returns are not guaranteed, but it depends on the project and that kind of stuff. So, people will reach out. Now, are you doing this with any registered funds, or is it only non-registered money?
We're non-registered right now, but we'll get there. We'll get to registered funds for people to participate.
All right, very cool. So what are some of the things that, a Canadian might want to do in terms of researching, investing in the US, maybe from a tax perspective, or just, maybe just some general advice that you can suggest to somebody that's wanting to get into the US market, some of the things that they should do as due diligence?
Of course. So tax is a huge pain point that we're solving for Canadians. My parents are both accountants, super conservative people, like the rest of the Canadians that I know. They're very conservative. Ava, what about double taxation? Tell me about that. This sounds exciting, but I mean, I don't want to pay double tax. Well, there happens to be a tax treaty between Canada and the US, and this is something I would encourage people to look into. Talk to your accountant or do the research, but essentially, if you have your corporate structure formed properly, which we have put in place, you can have, with the foreign tax credit, you can be relieved from double taxation with the treaty that exists between Canada and the US. So our investors are relieved from double taxation because of the way we set up our corporate structure. And that's the most exciting part. So we actually talk about that a lot.
Okay. All right. Very, very cool. Now you talked about in the beginning your properties being in the Sunbelt, and you mentioned this one in Orlando. What if I wanted to check out this property, wink, wink, to have a nice little week in the sun, but at the same time invest? Like, is that something that you guys do? I know sometimes companies do that, not always, but Sunbelt sounds kind of nice.
Yeah, Canadian snowbirds, right? They love going down into the US. So these properties are already rented out, and they're particularly rented to the people that live in the States. So if you're wondering if you could like go and take over, probably not. I don't think I could even do that if I wanted to, if you will.
That's funny. Well, I mean, you go and it's like a tax write-off, right? Because you're checking on your investment. But no, I'm just joking.
I'll set you up, Sarah. I will. 100%. I'll set you up.
That's awesome. So here's a question though, because I do have some more experienced investors listening to this show once in a while as well. How did you get started into the whole, LPGP structure and doing this? Can you share about, like, I'm guessing you started the business, the business is growing. What if someone wants to do exactly what you're doing, maybe not in the Sunbelt states, but something similar? Like, what are some insights that you can share?
Sure. So what I did was the whole reason that I got so excited with this company is actually from a US operator. I just seen him on YouTube, and I started listening to the type of returns, and I'm like, why isn't anybody in Canada investing in the US? Like, why have I never heard of this at 30 years old? So I started doing my research, Sarah, and I noticed that there's billions of dollars going in from Canada to the US every year on an institutional level. As far as it comes for retail, throughout Canada, let's just put it like this. There was 23,000 real estate agents that I was in competition with for being a realtor. There's only one other company here in Vancouver that does what we do. So essentially, how did I get started? I talked to about 40 to 50 lawyers and started realizing that they were all telling me something different on how to get started. So it's really all just about doing your homework over and over again until you figure out that beautiful structure that's going to make sense for you and your investors.
Yeah, absolutely.
It's a complicated process. I don't know if I really answered that right.
So here's a follow-up. So how did you choose the Sunbelt? Who's the feet on the street? How did you build your team? Because that's also a big part of it, right?
Huge. It's absolutely huge. I love that. So we have spent the last year and a half scouting operators that we've been watching and that are doing incredible across the border. So we've created the relationships with these operators now, and they essentially are really good at doing what they do best. They have the track record, they've done incredible, but maybe they don't have the capital they need to scale their company. So that's where CPI comes in. We come in as one big, I always call us the 51st state coming in to their deals.
So basically they would have, so I just want to take it a step back from just to dissect a bit what that means to the whole operator. So they would get a deal under contract, they'd have a large deal, and just correct me if I'm off, because
no problem.
You'll be able to better educate me on this. They've got, a 200 unit property. They don't need the capital. You say, okay, I'll bring you the capital. You do some kind of partnership with them, whether it's 50-50. Is that how you're structuring it?
Exactly. So it's deal specific. So on this Orlando opportunity that we have, our partners, passiveinvesting.com, we're going to be bringing in some Canadian capital as one entity. And then we obviously structure our partnership with them deal specific.
Okay. And how many Canadian investors roughly do you have per deal? Like, could it be hundreds? You select just a few per deal? Like, how would that work?
It could be hundreds, it could be five, depending on how much capital each person wants to deploy at a time.
Right. Okay. And what's the size of the deal? Like, the last three that you've done, can you give us an idea of how many units that was and roughly maybe the cost?
Yeah, of course. So this deal that we're focused on right now in Orlando it sounds scary. Okay, so it's a $90 million asset, and the equity raise is 32 million. So this is the beauty of pooling together capital, because nobody can ever. And this is, I always like to say this is kind of how the rich kept getting richer. So this is why I'm excited to tell investors, hey, why don't you guys pool together your capital and purchase $30 million assets, or in this case, $90 million assets. We like to stay between the 30, 50 million, but this one came and it's the most beautiful asset. So we jumped on board.
Okay, very cool, very cool. So then do you have that presence now where some of these operators will do another deal, they'll reach out to you directly, or do you source them each one by one at a time? Like, I'm guessing you're building relationships over time, right? Like, can you share?
Yeah, this is the exciting part of where we're at in our company now, because we've been noticed in the US. So now we have deal flow coming all the time to us. Now we get to pick and choose. We get to kind of cherry pick the best deals. So for an example, there was another deal that came in right now, but we're focused on this one. So it's great. So now we have the deal flow coming through, but this business is all about creating those strong relationships. Once you got that intact, everything else kind of falls into place. But we got the deal flow.
Good, good. So you're essentially the money arm of the deal. And how did you first get started into having people say, I want to invest with you? I mean, obviously these podcasts I'm sure help, but how do you go about finding the capital?
Very good question. Yeah. So another important point is we're kind of coming in as a capital portion of it, but we're also sit on the GP side as well. So we do have say in the project, and we are part of the decision-making process. But back to your question, we realize that Canadians are super conservative. They're not educated. There's not a lot of education here when it comes to real estate investing and so forth, obviously for deploying your money across the border. So we started our educational platform, Sarah, and it was really crazy. In about 6 months, we had 2,000 people sign up to learn more, because Canadians investing in the US, everybody's always really curious about it, but nobody knows how to do it. There's just too many wires crossed. So we noticed that we were getting this really big traction on people signing up and starting to ask questions. And I've been on hundreds of calls in the last year, especially with COVID. I've been like Zoom calls. I've been able to do lots of Zoom calls, but it's definitely cultivating the relationships.
Awesome. So they'll reach out to you based on your platforms and the information that you're putting out there. And so, I mean, it's a great way to attract money lenders, right? Rather than having to go out and actually like find them one at a time, you find different platforms, and then from there you have the calls. That is awesome. What's your next steps? So you're working on this Orlando project. What else is in the works?
What else is in the works? We're focused on the Orlando project right now, and we're gonna keep bringing those beautiful deals to our Canadian investors. We're gonna keep educating. We're gonna keep bringing on expert guests onto our platform for everybody to learn what we're doing. What I noticed is that it takes time because including my parents, it takes them about 10 to 15 times to really understand. And then once people understand, boom, they're sold. They're excited and they're ready to invest.
Very cool. Very cool. So I want to ask you this one last question. And I think you mentioned something about being younger and in the real estate game, that kind of stuff, and being a woman. What are your friends and your family saying? I mean, I don't know if you've got, all your friends are as successful, but what are some of the feedback that you're getting maybe from friends and family, because you grew really quickly, right? And you became very successful very fast.
I think this is just proud. They're just very proud because they've seen me go through the trenches. But I think I've taught a lot of people, and just by sharing my story, just including with my friends and family, just that resilience and just believing in yourself pays off every time.
Very cool. Awesome. So Ava, this next part is our lightning round. So I'm going to ask you 5 questions. You're going to give me the first answer that comes to mind. Are you ready?
I'm ready.
All right. Question number 1. What is your favorite real estate investing book?
Oh gosh, Joe Fairless. The best ever real estate syndication book.
Okay. All right, cool. Very cool. I know he has a podcast as well. Number two.
He's on a different level.
So number two, but the next question, and then this doesn't have to be real estate specific, but do you have a favorite podcast?
My favorite podcast. Oh gosh. Oh my gosh. I'm trying to think here. I listen to so many podcasts. Let's say yours, Sarah.
Well, I mean, they're listening to this one, but any other podcasts that maybe somebody might be interested in downloading?
The Canadians Investing in the U.S. by Glen Sutherland. He's really, he's my fellow Canadian friend, and he's awesome for education.
Absolutely. I think he was actually on this podcast and I was on his, so I don't remember which episode, but it was a great conversation. He's a nice guy.
He is.
Number three, what do you do for fun when it's not work related or real estate related?
Road biking.
Cool. All right. Very nice.
Very good workout.
Number four, if you lost everything tomorrow, so all your money, all your assets, how would you start again?
What would I start again? Oh gosh, what would I start again?
Or how would you start again?
Well, how would I start again? From the ground up? I might just go live on a beach somewhere, to be honest.
That's a very unique answer.
I'm trying to think. Maybe ask that one again. How would I start again if
you lost all your money and your assets tomorrow? How would you start again?
How would I start again? If I lost all of my money and my assets, just start from ground zero. And you know how many billionaires have lost everything, went bankrupt, and rebuilt a company over again? I wouldn't stop. I'd just keep going. All
right, very cool. And last question: if somebody has $50,000.
Okay.
How would you recommend they get started?
$50,000. Diversify it into different areas, maybe a little bit active and as an active investor and a little bit of as a passive investor.
All right, very cool. Ava, where can my listeners reach out and find out more?
Okay, so my website is CMPI Capital.ca. I'm huge on LinkedIn. I love my LinkedIn, so you can contact me anytime on LinkedIn, Ava Benesocky, or reach me anytime at ava@cpicapital.ca. That's my email address.
Amazing. And I always ask this last question. Any final last words of advice?
Final last words of advice, diversify, get your money working for you to make yourself build wealth faster. Well, you can do what you love, but get your money working for you in the bank. Don't just let it sit there and go to waste.
Great advice, Ava. Thanks for being on the show.
Thank you so much, Sarah. Thank you.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larby. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?